What's going on, everybody? This is Andrew from Defiancy. All right, guys, we're going to jump into this. So right now we are looking at the S&P 500 futures contract, and we can see that we're getting a nice move here pre-market. We're going to cover some important levels for today and just kind of the overall trend this week. Talk a little bit about crypto. Okay, so if we zoom out here, we can see that, and I think it's always important to look at the bigger picture first. We see that we're clearly in a bull trend still. Since the last video, I think we made the last video somewhere in here, we were talking about how the market would likely range sideways, expand, range sideways, expand, and then you might have some pullbacks along the way. If we look at the S&P 500, not the futures contract, because the prices are a little bit different, you can see that 5,000 here is pretty much just right around the corner, right? So 1%, assuming we get there. The reason I mention this, okay, and this is really kind of funny that this is really a thing, but traders, investors, the market in general is really weird about whole numbers, especially whole numbers like this. If you actually go back and look at this chart in general throughout the last couple of years, you'll see that whole numbers like 4,500, 4,600, 4,700, they're like these major support and resistance levels. Why? Really just humans. And it's fascinating. This is a really fascinating psychological component of the markets, because it's not very logical that 4,800 is any different than 4,825. But it just happens to be that big traders will say, all right, yep, I'm going to sell at this level, and it's interesting, to say the least. But the reason I mention that is just from a risk-reward standpoint, knowing we're coming up to this very psychological 5K level. I think what you'll start to see is as we approach it, and I think you're seeing it now, the market will probably start to look a little bit heavy. The reason I mention that, or the reason I think that, is because if there are large traders that realize that, yeah, we're not going to break this level very easily because it's such a psychological level, if enough people believe that, which I think that's the case, larger traders who have bigger positions would need to sell before you get there. Because if they waited to sell at this level, the likelihood that they would actually be able to execute size, getting out of size, or hedging size, would be pretty low, assuming enough people tried to do it at the same time. So I think you're already starting to see this. And I think if you take that 5,000 level as, again, I'm not saying this is logical, it's just the way it is. If you take that 5,000 level as resistance, which is likely to be resistance, and you look at some other factors, so we're going to look at the RSI here. If you look at the daily, and if you don't know what RSI is, it stands for Relative Strength Index. It kind of shows you, how overbought or oversold a market is. It's pretty good about that, especially on the higher time frames. If we look at the weekly, we're really overbought here. We're well over the critical 70 level on the RSI. If you look in the past, once you get over about 70, things start to get a little toppy. And not all the time. I mean, it can stay up at 70 for a while, but as you can see, you were getting some, relatively large pullbacks here, even though you were going straight up. This was that, 2020 COVID rally. You can go back and look here where we had this big sell-off after breaking 70. Again, this is not guaranteed to be effective or guaranteed to be a great indicator in terms of when markets will turn, but it's just one thing to look at. And I think being close to 5,000, we're starting to be overbought on the higher time frames, or we are overbought on the higher time frames. Coming into a seasonally not so great trading quarter, really the first. If you look seasonally, like March, April tends to be a little rough sometimes. Not all the time, but it's not typically. I don't want to say it's a bad time for stocks, but a lot of times it's very flat, especially during an election year. If you take all the election years, February or January through I think in March or April, is basically break even flat. So we're actually beating that right now, but I think this is setting up for a pullback. Now, again, I'm not trading as if that's happening right now. I'm not positioning short or anything like that, but I'm just saying I'm starting to look ahead and say, look, the risk reward is not really that great for stocks right now in the short term. In the longer term, it's a fantastic risk reward, in my opinion. Now, I shouldn't say longer term, but medium term, as in 1 year, 2 years, it still looks pretty good if you look at global liquidity, which we've talked about a lot on this channel, and really the Fed's guaranteed likelihood that they're going to have to print more money to service the debt, and all these other factors that relate to liquidity. It really does feel like this is going to be a really good stretch of, let's say, 1 to 2 years for the markets going into 2025 and maybe beyond. Now, that's not really what this video is about. We're trying to get a little bit more granular just on the daily scale. I just wanted to zoom out and show that to you. If we zoom in, we can see that the market is still doing this staircase, the staircase pattern. And this is actually really bullish price action still. There's really nothing weak about this market from a technical standpoint. We're talking about the S&P 500, that is, making higher lows. So we had this pullback here early January, and it's really just been higher lows. Every time you get a pullback, it gets bought, rips very shortly after. This is bull market price action. So again, not bearish. We talked about the higher time frame. I'm just trying to really be ahead here and kind of point out that, look, you're probably going to see a pullback that's bigger than what most people expect given how extended this market is, but that's probably later. In terms of today, this week, things look very bullish still. And if we zoom in even closer, I zoomed out again. Bear with me. We can see that this is basically doing this, this accumulation pattern over and over and over again, where you get these big whales are accumulating, price goes up, but you're making higher lows, accumulation. Got a pullback here, they're accumulating more. This typically results in a break to the upside, assuming that you do not have any news or any kind of event around the world that scares people. That's really what, again, this is not guaranteed to go up, but it's showing you that on a lower time frame, there are institutions, trading firms, what have you, that are accumulating a position. Why? Because every time you go down, you can't make a new low. Why? Because the bid is there to buy. Now, again, that doesn't mean it can't go down, but it's showing you that the momentum is up. That's really what I'm trying to get in here is a lot of traders will realize the risk reward is not very good on the higher time frame, but not realize that on the lower time frame, it's still extremely bullish. And you want to take advantage, in my opinion, of that on an intraday basis if you're a day trader. Now, if you're a swing trader, maybe maybe you're actually starting to look for shorts, okay? Not financial advice, but you do have to play this market differently depending on your time frame. On the lower time frame, like if we zoom in even more, this is a very bullish structure. Again, a lot of accumulation right here, okay? If we look, and I'm going to actually zoom in on the futures contract. If we look yesterday, price tried to make new lows several times. Boom, support. It really tried to make, look how aggressive some of these candles are. It really tried to break down. It couldn't do it. Why? Because whales stepped in and they basically said, nope, not happening. Okay. So what that means is as you pull back, you kind of have to assume that they're going to keep doing this. At some point they won't, right? But again, this is usually because of some news or something, right? And if we look at the events that the economic data that could come out over the next few weeks, there's nothing, or that will come out over the next few weeks, sorry. There's nothing here today. Okay, so this is like your textbook. If the market's going to push higher, it can do it. There's nothing to stop it really from an event standpoint. The only thing that there really is, in my opinion, that can stop this market, again, assuming that something doesn't happen randomly, a nuke blows up or something crazy happens, right? We don't trade based off of that. That's just something you have to be prepared for, okay? But assuming something crazy doesn't happen, what's likely to occur is this is just going to keep basing out, accumulating, basing out, and ripping higher. You're in a very, very, very strong trend right now. And we've talked about how these things do not turn around just for any reason. Why? Because they're reflexive feedback loops. And we can make another video on this, but as price goes up, it causes more people to buy. This is not healthy over the long stretch because people get very leveraged, overextended, or price gets very overextended. But in the short term, it's very bullish. Why? As price goes up, more people feel more FOMO. They want to buy more. They wake up, they look at their phones. We're talking about retail traders or investors, and they're like, oh my gosh, it's up more. And I have more capital that I wanted to invest. They're just going to keep piling in. This is how you get tops. I shouldn't laugh, but this is a very toppy kind of situation potentially. I don't actually think this will be a top, but it will probably create a local top. Retail piling in, and institutional investors and traders, they're going to take advantage of it. If you look at some data, and I wish I would have pulled it up, a lot of the capital that's been coming in over the last few weeks is people that had cash on the sidelines, retail investors, and they've been piling in. So savings have been coming into the market. Now, that's not necessarily a bad thing, but it's just one more confluence that typically retail is going to be very aggressive towards the turning points on the lower time frame, higher time frame, medium time frame. It's just how it is. So again, when we step back, you have to start being a little bit more cautious, realizing you're probably going to get a pullback that's bigger than most people expect, that could last a few weeks or maybe even a few months. But overall, the trend is still very, very bullish. Okay. So what levels are we looking for intraday here? I don't want to spend too much time on this video, but I do want to talk about some important levels here. So we talked about the levels on the higher time frame. I'm going to pull this over here just so I don't have to redraw these lines. And you're probably looking at this thinking, what are you looking at here? All these lines. Well, we can talk about this thing on the right here later, another day, but this is actually the depth of the market. This is like the market actually for futures contracts. These are the bids, these are the offers, this is the actual orders coming through. But that's not what I really want to show you. What I want to show you today is that when you're in this bullish trend, like we're in this week, you will get these pullbacks before you rip higher. Prices do not just go straight up. So what we're looking at here is if you wanted to long, like if I wanted to long, well, I'm going to wait for a little bit of a pullback. Why? Because we're already at the daily high, the monthly value area high, well above the daily value area high, way above VWAP, and way above the daily open. So what is that telling you? Well, if you were to buy here from a short-term trading perspective, so we're talking like 15 minutes to a couple hours, you're not buying something at a good price. Why? You're already well above the levels that are typically good levels to enter intraday. Now, sometimes, this is much less, this doesn't occur that often, honestly. Maybe, I don't know a percentage, but sometimes in a very strong trending market, you can get away with buying up here and it'll just rip higher. That's probably not going to be the case today because of, like I said, it's kind of obvious that we're getting to very significant resistance at that 5,000 level for SPX, and you're going to start to see people selling into strength as we approach it. So what do I mean? Basically, intraday, I'm looking for a pullback to VWAP. I want to see the response there. Can we hold VWAP? If we were to hold this previous day high, which is right around VWAP, the weekly open, the previous week close, I would probably take a long here. I wouldn't long as soon as it gets there. Okay, I would wait for it, to see some absorption. You'll be able to see that on a depth of market, or if you're a pure candlestick pattern guy, you'd probably have to wait a little bit to see higher lows on a very low time frame, 5 minute, 1 minute, whatever. So that's where my first level would be. So that's about 490 or 4975 for ES. If we weren't able to hold that, then my next level would obviously be this daily. This is the daily POC of today. So this is overnight price action. I'd want to see, are we going to hold this level, protect this level? This is also near the previous day close. Okay. And then I would just keep going down. If I don't see strength there, if I don't see absorption, I don't enter. But eventually you probably would see some absorption. My guess is this, and this is just for today. I'm talking low time frame here. And I'm not going to spend too much time on this. My guess is this: if you weren't able to hold this level here, you'd probably flush all these guys out. Why? There's a lot of contracts that traded, or not a lot of contracts, but enough contracts that got accumulated overnight where it's like a target. It's like a sitting duck. You could wash these guys out and you'd probably bounce somewhere in here. So if we don't hold, really this level here or this level here, you're probably going to move down pretty aggressively somewhere into this weekly POC, monthly POC, which happened to be a very sticky level yesterday as we tried to break it. We kept getting rejected. The depth was pretty aggressive on the offer side. So this is where I would be looking to long, and that's also your previous day VWAP and weekly VWAP. So very clean levels here for today. If we get here, definitely would be looking to long here. I think this is the best opportunity if that presents itself. And then maybe some smaller scalps. I wouldn't put a lot of size on a long here or here, but I am interested, to see if there is accumulation there for a little scalp higher. Also, this level we talked about potentially could hold this. So these are really the levels I'm looking for if I'm longing. Short, there is no levels. That's the thing. When you're in price discovery, when markets are making new highs, which technically, I'm not so sure if we're still making new highs. Technically, this is the high here. Okay, so there's one level I'd look to short off of, I reckon, and that is the high we put in on Friday. I guess this was Friday, which is about 5,000 for ES. But that's really the only level. Now, if we were to break under this really aggressively, then yeah, this would be a level you could short off of on a retest. But when markets are in price discovery, I typically don't really want to short them. Not to say that it's not a bad idea under certain circumstances. If you see some confluence, to each their own. It's just a lot easier, in my opinion, to wait for pullbacks and long, because that's where the general, that is where the momentum is right now it's up. Let's move back over to the charts here and talk a little bit about crypto. Okay, we'll finish off here. So crypto is doing really well right now, in my opinion. If you look at this on a higher time frame, so let's go to the weekly here, we can see that bears are not really getting that big of a pullback. So we had this big weekly rejection here. Everybody panicked, temporarily broke under 40K, and then came right back up. And now we're just going sideways. This is very bullish, and it's really the market is telling you that you're not going to get a huge pullback under this new regime where global liquidity is going straight up. Okay, you have people that have effectively no exposure to crypto or Bitcoin. You're not even close to all-time high right now, and the stock market is at all-time high. What I'm trying to say is you're just this kind of environment where you now have an ETF where people can actually buy very large, volume of orders, which was not the case before. And I'm talking about TradFi guys. You do not get pullbacks like people had really, had gotten used to. Like huge, 30% pullbacks, 40. That's done. And I think people need to understand that if you're trying to invest and time this market based off what you learned over the last 10 years in crypto, forget about it. It's never going to be the same. Now, altcoins will do that because they don't have an ETF and just different dynamics there. But for Bitcoin, it's going to be a lot less likely to give you really significant pullbacks until it's way more overextended than this. And the reason I say that is, again, you're not even close to all-time high. If you adjust Bitcoin for inflation, you haven't really moved as aggressively as you think. A lot of people see, oh my gosh, this thing is up, a huge amount over the last 6 months. Why? Do you realize how much or how far down the dollar has gone in value over the last 3 years? Most people don't put that in consideration. They're looking at Bitcoin versus a currency that's been inflated probably closer to 50%. We say, they say, CPI was at 9% or whatever. But if houses are 2x, and I'm not going to go into this, but I'm just saying, I think most people are not looking at this in the most accurate way, which is that this is an asset that is really very cheap right now. If you actually look at versus the dollar. Now, if you want to compare it to the S&P 500 or like gold or something, that's a different story. So I'm saying all this to say, people that are waiting for this giant pullback, it can happen. If you get some kind of economic event, a nuke goes off or World War III starts or something, maybe that would, pull it back to 35 or below. But under these steady state conditions of, these economic data that's coming out, the things that we kind of know are, election year, the variables that we do know, you're not going to get a big pullback in Bitcoin. That's just my personal opinion. I think you can get, very isolated or short duration pullbacks, but overall people are going to be accumulating this, and I could rant on that more, but I think you get the point that this is going higher. I don't know how long it takes. It's just, if there's one asset, in my opinion, that is just completely disconnected from reality in terms of price is Bitcoin. Like, it almost makes no sense to me, or it makes no sense to me at all, that this is not significantly higher right now, given what we know from a global liquidity standpoint and really what's going on around the world. As less people, I mean, we could go really deep into this, but it's too early. I'm just going to finish the video here. Bitcoin, extremely bullish going into the next 2 years and well beyond that. All right, guys. I think that's all I'm going to cover today. Until next time, happy hunting, friends.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this, and let us know in the comments, what do you think about today's video and Defiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description. And until then, we'll see you in the next Defiancy Insight video. Bye for now.